have big time, in particular the last couple of years, is that you don't have to be as net short as I thought you had to be in quad 4 because you can buy treasuries, gold miners, REITs, utilities. There's a lot out there. But again, on a relative basis, the challenge, the goal, you asked about my goal. My goal is to be 100% invested. I'm absolutely not 100% invested right now, but I was last week. Okay. In fact, I was more. So when you put more leverage, so a lot of people, if you have $100 that you manage, let's use $100,000 so that it's more like a number that people probably have at a minimum in their accounts. If you have $100,000 and you put leverage on that, you could be invested 150% gross, right? So when you think about that, people do use options and leverage. So I'm comfortable in doing that. But max gross long is at the low ends of the range, and you take it off at the top end of the range. I don't have a target on the way down. Now that might confuse people. Some people, and I have good arguments with certain portfolio managers on this, I say, hey man, I don't target my net on the way down. I've been there, I've done that, and it sucked. Like I did it at Magnetar Capital because that was the rules. I had to have, you live in more of a box. When you work for somebody else, you have to live in more of a box because they have rules, right? That's how their business works. I respect that. I learned a lot from that. But when I was at Dawson, I had no rules. So I was in 2003 when I was up 81% net, I didn't even know what I was doing. I make the argument all the time that I actually got good in this business because I got lucky. I was bullish when the market took off and I was long consumer stocks, which were ripping. Yeah. I'd have no idea. I would never think about my net exposure. Think about how stupid that was, right? So when I make fun of you, I make fun of my former self. Yep. But still to this day, I am a little bit of a cowboy when it comes to net because I don't today I got to get to 20% net long. That is absolutely not what I do. I go down the account. Let's say I have, and the other thing is that I do is I cut out a bunch of positions. So yesterday I went from 48 positions to something like 30. I just beep out. I sold all my Apple. I sold a bunch of stuff. I bought a bunch of JP Morgan. So I flipped some stuff up too that I hadn't owned. So I'll not only remove stuff aggressively, but I'll add new stuff, and I'll have less stuff. When I think their market correction is going to happen, and then after it happens, I'll just build that back up again. There's no rules against going buying back Apple. I'm not going to have a bunch of maxis come after me for saying I sold my Apple, right?
Exactly.